Hey everybody, it's Brad and Greg from Ranch Capital Advisors. Hello, Brad.
Hello, Greg. Happy Monday, and might I say how fantastic your hair looks this morning.
Oh, thank you. I like your shirt.
Yeah, how about my face? It's just perfectly made for radio, as always.
And in today's episode, we are going to share with you why we believe that we are in the middle of a secular bull market. And we're going to give you 4 reasons that support that view. And then at the end of the video, we're going to share with you 3 reasons why people tend to underperform and how you can avoid doing that. So first off is, what is a secular market? A secular market is a period of time that usually lasts anywhere from 16 to 20 years, where you have a period of outperformance or underperformance when it comes to stocks. So a bull market would be, of course, a secular bull market would be a period of outperformance with relatively shallow corrections and pullbacks. In a bear market is usually a time when the market's not doing a whole lot. Reminds me of when I started my career back in 1999. We just got out the end of a 20-year bull market, and the S&P went literally nowhere for the next 12 years, averaging around negative 1%. And the first reason that we think that we're in a bull market, a secular bull market, is based on history. You want to elaborate a little bit more on that, Brian?
Certainly, Greg. Thanks for throwing it over to me. When we look at the history of, bullish and bearish markets, we can look at the period of time after World War II, which was a great period of expansion from the late 40s into the late 60s. We did run into some issues in the late 60s with liquidity, which we'll touch on later on, which caused a secular bearish market really into 1982. And from 82 to 2000, it was straight uphill. Outside of the little blip we had in 07, all economic trends remained relatively strong. But in 2000, we got to a point where things got a bit overheated, and we entered again a secular bear market, which took us you can look at the lows of 2009 or, even later on as the bottom of that market. And since then, we've been expanding greatly. Most important is that the underlying trends of the market, for the most part, have all remained bullish. And that's the most important part. Again, the drops are going to be shallow and are going to be bought up rather quickly versus a secular bear where the spikes are sold rather quickly at the same time.
Yeah, so it doesn't always mean that the market's going to go straight up, but the overall long-term trend is certainly up, and they tend to last a prolonged period of time.
And looking at, whether we look at the 09 lows or, lows in 2016, it still points that based on history, we have a number of years left in the secular bull market. Yeah,
it's a great time to be an investor. I would tell that to people all the time. And the second reason that we think we're in a secular bull market is very comparable to the 1982 bull market, is the very favorable demographic trends. Back in 1982, you had the largest population ever, which are known as the baby boomers, 75 million of them, that were starting to enter the workforce. They were in their 30s and 40s. They were earning good salaries. And what do you do when you're in that, typically in that age group, is you're buying houses, you're buying cars, you're having families, you're buying, groceries and diapers, you're spending money, and that spending really drives the economy. Now, fast forward after the baby boomers, you had Generation X, which was our generation, and there was 10 million less of us than the baby boomers. So there was a real gap in demand. So there were 65 million Gen Xers. Now, today, we have 85 million millennials that are now entering the workforce, buying houses, having families, and it is going to be a driver of the economy for a long period of time. And the third reason that we think we're in a secular bull market is because of technology. The advancements in technology are growing exponentially, between big data, cloud, artificial intelligence. It is really making companies more productive. It is making them more efficient and saving lots of money for them. Technology has really driven the stock market over the last 8-9 years, and we think that trend is going to continue. And it even affects biotechnology, because the biotechnology is so reliant on technology. A good example is the coronavirus. If the coronavirus would have happened 10 years ago, there's no way we would be in the same situation today, how quickly we came out with a vaccine. And that type of technology is just going to get faster and faster. And finally, the fourth reason that we think we're in a long-term bull market is due to liquidity. It's something Brad talks about all the time.
Thanks, Greg. Liquidity, again, is the lifeblood of the market. It's what causes things to go up, or lack of liquidity causes things to go down. Right now, we're in an extremely incredible period of massive amounts of liquidity. You can see the way items have, investments have appreciated, homes have appreciated, Bitcoin has appreciated. There's tons of money in the market. What we're looking for is just what's going to be that factor that's going to change, the current stance with liquidity. Right now, we don't really see anything. And for any change in liquidity going forward, we know it's going to be very slow and steady based on what the Fed has said. So we expect liquidity to remain strong for the foreseeable future. And, there's really nothing out there stopping the supply growth of money inside of the economy at this point in time.
Yeah, a lot of money is chasing stocks. And another reason is that a lot of money that used to go into bonds is now finding its way more and more into stocks. And we think that trend will continue. So we share with you the 4 reasons why we think we're in a secular bull market. I'm going to give you a few reasons why people tend to underperform. The average investor tends to underperform the stock market. And the 3 biggest reasons is, the first is about fear. A lot of fear out there. Of course, there's a lot of narrative news. There's social media. There's newsletters that are designed to scare you. We get lots of calls all the time for our clients about, this newsletter's predicting a crash, and they're just really doing that to sell newsletters, is what we tell them. So there's always a reason to be fearful of something, but the market's internals, the strength, all those things are a much more powerful force. So again, the market never goes straight up, and there's going to be corrections. You just have to expect it, but you don't want to get scared out of giving yourself this opportunity to have your money appreciate and really ride this bull market out. The second thing is about timing the market, where people tend to try to time the market. What's your thoughts on timing?
It's almost impossible to do. What we're trying to do from what you would consider a timing standpoint is to just recognize the trend changes so that we can be out in front of it and start making the appropriate moves to either get more aggressive or more conservative. We're never going to try to sell at the top. We're never going to try to buy at the bottom. It's very difficult to time it to a T, but if you stay cognizant about the internal data of the market, you'll be able to understand, and we can foresee subtle changes that would make us be a little bit more conservative, more aggressive. It's not saying I'm bullish and bearish. It's going to be a change over time, and that's the way people should approach it.
Yeah, I think the more people look at their holdings as businesses rather than just ticker symbols, the better investor that you're going to be. And in a secular bull market, you just want to ride these things out. On any dips, buy more. And the final reason that people tend to underperform is really just not being focused. Everybody, of course, has their day jobs and families and all these activities that they're doing, but successful investing really does require time. And you should be putting about at least 12 hours a month into your investing. If you don't have the time, it's a great idea to team up with somebody, to work with an advisory firm that's going to put that time in for you to make sure that you're capitalizing on this secular bull market. So enjoy it while it lasts. It doesn't always last, but we think this secular bull market is going to last for at least another decade, and it's a great opportunity for all of you to make some money. So if we can be of help, please let us know. Thanks for watching, and God bless.
Take care.